Good morning, good afternoon, good evening, whatever time it is, wherever you're watching. Welcome to Bridging the Gap. As you can see, we got a new setup, man.
We got it, man. We got it.
Yeah, we also got a special guest, my friend, F3 brother Mark. I call him Hush Puppy, but I'll call him Mark today.
Now, you know, at some point in time, we got to hear about the Hush Puppy story, but just keep that in mind. Man.
Yeah,
we will. We
got it. But I got my notepad with me because I'm expecting to write down some great stuff today. We're going to talk to Mark about his journey in the stock market and real estate and just how he got to where he is now. I know William's going to get some questions answered, and I am too. But today is more like a bigger pocket setup where we just sit and talk. No real script, no real outline. We're just going to talk until we run out of time, really.
Sounds
awesome.
Good, man.
So, Mark, I guess let's start with the Hush Puppy. You know, we are part of F3, which is a workout group for men. It's set up to start workout groups for male community leadership. But how'd you get Hush Puppy? I never heard this story.
Yeah, man. I grew up in Lexington, North Carolina, which is home of barbecue.
Okay,
it makes sense. I worked at a restaurant on Main Street called Smoky Joe's, and when it came my turn, I started telling that story. And I used to take all the cornmeal and put it on the spatula and scrape off the sides and pop it in the fryer, and I made Hush Puppies, and that's how I got the name Hush Puppy.
We understand that. Good fit. Good
fit
for you.
So in F3, we all get nicknames. Mine's is Akron, and it's because I don't have a real liking for LeBron James, so they named me after the city he's from. Still respect him. Probably one of the top 5 all time, but he's not the GOAT. All right. I digress. So Mark, man, we were you and I had lunch, and I was telling you about some things we had just talked about in the podcast about covered calls, and just got the juices flowing. I invited you to be a guest, and I appreciate you joining us.
For sure.
Just want to get started and talk how you got started in stocks.
If
you can kind of.
Yeah, I went to school in Raleigh at NC State, and a good friend of mine heard about this course, and it was a guy from Rocky Mount, North Carolina, teaching this course about stocks.
Okay.
And I was like, man, I've always just had this yearning. School wasn't my thing, and lots of other things weren't my thing. I like sports, but I just had this thing about money. I don't know what it was, and so whatever you could take money and generate more. And so I learned a lot about options. I learned a lot about a lot of stuff, and I lost a lot of money. I put $2,000 in my account probably 12 times and lost it 12 times. And then finally just got my wits about me and was like, if I just buy the stock and own it forever, it's a stock that I'd want to pass down to my kids' kids. Biblically, we're supposed to take care of our kids' kids.
Right.
And so that was always in my mind. And so maybe the stock is our kids' kids for our kids' kids. And so I picked out 12, put it in a basket, buy them in 100 increment shares, and then I sell the covered calls off of them.
Great.
Sometimes weekly, sometimes monthly, depending on what the charts tell me to do.
Now, Mark, going back a second, you said about you bought the stock and you sold a covered call. What in the world is selling a covered call?
Yeah. So certain stocks are optionable, and certain stocks are not.
I'm with you.
And it used to be, back when I first started, the third Friday of every month, these options. So let's say you buy, this is not what the price of the stock is, but let's just say Coca-Cola is $100.
Right, gotcha.
And this is what I did. Looking at the charts, it looks like Coca-Cola is about to go down. So I'll sell one strike price out of the money. And all that means is I will sell the $110 covered call. So if Coca-Cola, which looks like it's going to go down to me, goes from 100 to 110, then I have to sell it at 110. But I also get paid for agreeing to do that.
Right. Gotcha.
If it goes, so let's just say that's the July option.
With you.
And if it goes to July, this is the way it used to be. Now there's options that expire every single week. But if it goes to the third Friday of July and doesn't go to 110, then I get to keep all the money that they gave me for agreeing, and then I do it again the next month, and the next month, and the next month.
You said something that a lot of people have a misconception about. You hear the word options, and the professionals, which again, I'm not an investment advisor, can't give investment advice, etc.
Same here.
Yeah, but but the professionals will tell us option trading is risky. Help debunk that myth.
It is.
Okay.
So on the other side of that transaction, somebody is buying this naked option. They don't own the underlying stock. So if that stock goes down and they bet on it to go to 110,
Right.
then they're losing time and they're losing value. And if it goes to 110, it expires worthless.
Gotcha.
So there's that side. And there's people all around the world who trade these options.
Right.
And there can be, there can be a winner and a winner and a winner, but in the market, there's generally a winner, a loser, and then the market maker. So it's perceived to be extra tough to make money in the market, but it's really not.
I'm with you.
It's really not. If you want to, it's just like a piece of real estate. I kind of see it as collecting rent
Yeah, that's it.
off of real estate. I'm collecting rent in my worst case scenario. And so I read a book about Buffett, and I learned that from like 2000 to 2004, when the market was kind of tanking and his net worth increased by like several billion, that he was selling covered calls. He calls it sweeping the pennies off the table.
Yeah, that's it. That's it.
And so I just collect rent.
Yeah, that's good stuff. And when you said that, when I started doing it years ago, we have a term we call it rental stock. And like you just said, it's just like having a rental property, and in turn you're renting stock out. And I remember years ago, there was a stock called, I think, Shop at Home, around $12.50 or so. And for about a year, it pretty much channeled or sort of consolidated. And for about a year, we rented that thing out about 7 to 10% a month. So, and that's what we thought about. Hey, this is like renting a house out. Now, when you think about writing a covered call and options, a lot of times people think it must be a garbage stock. Even though you gave the example of Coca-Cola, are there good, solid companies out there that you can do this on?
Oh, sure. And there's some that pay a higher options premium than others, but all your mainstay, run-of-the-mill stocks, Apple, Microsoft, Tesla, all of them, generally stocks that are more volatile, will have a higher options premium. So if it moves $10 a day, it'll have a higher options premium. But most all of them, unless they're generally the stocks that you don't want to own, are the ones that are not optional.
You're right, man. You're right.
From my understanding, and I've started reading that book you recommended too, and he does the same thing. He literally buys the stock, like he buys the house and rents it. Is that the same angle you do it from as well?
It is, and again, thanks for the book recommendation.
Yeah, I bought him a copy too.
Yeah. What the guy does in the book pretty much is he does write the covered call, and then of course, if the stock comes back down, he'll in turn like sell a put. We'll get into that in just a little bit. But he's looking at both sides of the equation. But yeah, it's the same general concept.
Okay.
Yeah. Now, Mark, generally speaking, because I know a lot of people out there are salivating for ways to make money without having a part-time job or actually doing what you did with the hush puppies, trying to deal with that. And nothing's wrong with hard work, folks. Everybody needs to have a lot of that getting started and continuing.
For sure.
But are you more inclined to do weekly options or monthly, or do the long-term leaps? Or are you looking for opportunity?
I'm looking for opportunity. So some weeks, let's just say you have week 1, week 2, week 3, and week 4. And week 1 pays $2.
Okay.
Sometimes week 2 will pay $5, which is more than double.
Gotcha, yeah.
And so that looks good. And then you go to week 3 and it might only pay $6. So it's only you go from a $3 increment to a $1 increment. And it all depends on the volume and the demand, and so I just kind of do my calculations based off of that.
Okay, understandable. Sounds good. Is there a projection that you look to do every time you go into a trade, let's say on a monthly type basis, any type of percentage that you're looking to get to make it worth your while?
Percentage-wise, man, I have a dollar amount.
Okay, I got you.
I have a dollar amount, and so I try to do same dollar trades to not get myself over my skis. It's just my way of kind of protecting myself. So this might look really good, my eyes might get really big, and I'll say this is a no lose, and then that'll be the one. So I try to trade in $50,000 increments every single one. So I might trade up to a lot higher dollar amount, but it'll be several trades.
Okay, all right. Now you talked about $50,000 increments. A lot of our people on the podcast are thinking, I make $50,000 a year.
Nice.
But can someone with a lesser amount do what you're doing and have success?
For sure. Like like for instance, I'll just go ahead and tell you. This is not a stock tip, but there's a company called Shift Technologies. SFT is the ticker symbol, and they compete with like CarMax, and they're one of these car delivery services, and they're out on the West Coast, and they're like $8 a share. And so the options price is like 35 cents. So if you have to buy 100 shares, what's that? $350. And so $350, you're in the game, and you can just
Build up from
yeah.
Good deal.
Yeah.
Fantastic.
So how,
Build up from there.
if you're done with the stock side, we can come back to it.
Yeah.
How did you get from the stocks, the covered calls, the options trading in college to Gatlinburg, Tennessee? And it was a stop, Mississippi before that, right?
Yeah, sure.
So did Mississippi come before Gatlinburg?
It's kind of intertwined.
Did you ever invest locally? It seemed like you did virtually more.
Yeah, real estate is just got a lot of appeal. The great thing about stocks is it's liquid, and I can pick it up and put it and place it anywhere I want to go. The downside is there are close to no tax benefits. There are, like you can form an LLC and all that stuff, just like you would a normal business. But in real estate, there are massive tax benefits. And so the more I learned about leverage, about the tax benefits, and the more I learned about the return on investment in these short-term rental markets, I just got really excited. And plus, my family, we love to vacation, and we love to experience other people's Airbnbs, how they fixed it up and how they treat us, and the uniqueness, the location, all the things that they've done. And so when I first got started in real estate, I bought 2 condos here in Greensboro. And instead of doing a 529 plan for my kids, I bought a condo apiece for my little girls, and that's going to be, so if they decide not to go to college, they have an asset. If they decide to go to college, they have an asset. If they wanted just a place to live, they've got a place to live.
That's great.
And so those will be paid off by the time they turn 18, and they're learning how to collect rent, they're learning how to keep a P&L, and they're learning how to do all that. But I really like the short-term rental market, so I looked all over. I looked in Charleston, South Carolina, Austin, Texas. I looked in Nashville, Tennessee, and I love all those cities, and I deemed them to be good short-term rental markets, and they are, but they have a lot of regulatory problems. And so the hotel lobby in this space is really, really strong, and the city council doesn't have a good way to figure out the taxes. And so I found this area in the Tennessee mountains, the most visited national park in the country. 15 million people can go there, or do go there a year. You can drive there in a day's time from 75% of the country.
Wow, okay.
People have been vacationing in these cabins since the 30s.
Boy.
And so that is the market. It's not like the hotels came first. These cabins have been there forever. And then 2016 presented a great opportunity. There were forest fires up there. I don't know if you remember. Tragic. It was awful. But in real estate, when bad news comes, you know, investors, skittish investors, kind of step away. The crazy thing was, from 15 to 16, the population, not the population, but the vacationers increased. And from 16 to 17, it increased. From 17 to 18, it increased. 18 and 19, it increased. And so we started buying. So we bought 1, and then I bought 2, and then I sold 1, then I bought 3, and then I sold 2. And then this past year, there was some incredible tax legislation as part of the CARES Act that allowed me to go back and pull taxes that I've paid for the past 5 years forward. And so I just went on a buying spree this past year. And we bought a lot, and we've seen incredible ROI, incredible gains, and we've got 8 and 8 under construction.
That's exciting. Now, you mentioned the short-term rental market. Explain a little bit more to our listeners who maybe are looking to do their very first deal. What in the world is a short-term rental?
Sure. So the IRS defines a short-term rental as anything under 7 days, 7 days or under. It's really, you've heard of vacation rental by owner, which is VRBO. You've heard of Airbnb. That's what it is. So instead of going on Travelocity and picking a hotel, or going on Hilton.com and picking a room, You can just go on Airbnb or VRBO and get a better experience, in my best estimate, a better value and a more unique experience in a home that was kind of created for this experience.
Exactly.
So we put pools in all of ours, we put game rooms in all of ours, we put theater rooms in all of ours. So if you want to just stay there, you don't have to leave. Like so during COVID, like it was dynamite. Like people loved it because they didn't have to go out.
That's great. That's great. And it sounds like we talked about that return on investment. It sounds like for me to rent something, let's say for a week versus a month, are we talking about comparable returns there, or do I get a little bit more on the weekly part of it?
So if I were to, are you asking if I were to rent my short-term rental for a month?
Or for example, versus someone buying a property whereby they're just having a standard tenant that's renting it monthly versus the weekly rentals. I understand there could be a difference in pricing there.
For sure.
Okay.
I mean, the return on investment of your capital is a lot higher.
Okay.
The return on investment of your time could be argued if it's higher or not, because it certainly takes more time. It can be more headache. The upside is there's no eviction process. Like there's a check-in and a check-out.
I'm sorry.
And you got so there's no eviction process. There's no rent moratorium. Like they agree, they pay up front, they pay before they get there, and they check out on the day they've got somewhere place to go. And
I got you. Here's a little off the wall question. We all are fellow believers, and we're always trying to advance the kingdom of God. Is there any reason why even a church congregation should not even consider doing like that to be able to bring in new streams of revenue to really fund their vision? Any reason why a church shouldn't consider that?
Man, I've thought about this because my kids go to a Christian school.
Okay.
And it's just so out of the mainstream. I think it's just never been done.
Right.
Like people just don't do it. But I'd bang my head against the wall. I'm like, what is there some kind of what is the barrier to allow non-for-profits like schools and churches to make good investments? I mean, your Fortune 500 companies, they make investments outside of themselves a lot of times.
Right.
They have funds. The local healthcare system has $1 billion like trust fund. Why can't we do that?
Yeah.
Right?
Yeah.
And then it takes the burden off of the congregation, trying to keep it alive, because the operational expenses of a church can be really high.
It can be.
And so I think it's a great idea. And it can also be used for church retreats.
Yep. Well said.
You
Well
know?
said. Well, I'll say this and pass my time back. We're going to be picking your brain because I can tell you there are a lot of churches out there that we work with that the tithe and offering whole scenario has changed somewhat in people. But I think it's a great idea, and I think what you've done and what you're doing can definitely help us help a lot of churches fund and fulfill the vision God's given them.
So a little bit of background on William. He's the CFO here. He does taxes, retired CPA, but does a lot of the ministry to individuals and more so to churches, just on helping them find different streams of revenue. He has entire systems built for that. So he's really passionate about not only individuals' financial success, but the church's financial success as well. So that's kind of where that question came from.
That's it. But I tell you, I'm excited about it, what you've done. And it's just an amazing thing. I tell you the thing that really got my attention when you talked about COVID.
Yeah.
So it sounds like during COVID, you had even a waiting list of people wanting to get in because of how you structured things. Wow.
Yeah, it's good, man. Like I mentioned earlier that I lost $2,000 like 12 times.
Yeah.
For your audience, there's a good book called David and Goliath by Malcolm Gladwell.
Okay.
And he talks about how like 75% of the United States successful people, what we deem successful, they grew up with a learning disability.
Gotcha.
And so I just think it's good when you're young to kind of have to make yourself overcome stuff.
Right.
Even if the world comes easy to you and you're just naturally brilliant and you have incredible parents, make yourself overcome things. Because when you become an adult and you've never overcome anything during your adolescence, and you become an adult and you're faced with something hard and you've never had to do it before, you get crippled. And so the easy thing to do is walk away and say, that's not for me.
Right. That is so true.
But I don't think God made us that way.
No, I agree.
He didn't make us that way. And so that's not in his character, it's not in our character. And so when we're created in His image, we're created to represent that. And so it's just, it's more rewarding, and seriously, it's a good character lesson for yourself. Keeps you humble, right?
Yeah.
Amen to that, brother. Woo.
I don't know how many people would sign up to lose $2,000 12 times, especially in college.
Yeah.
I'm telling you, man.
Yeah, and you talking about what, early 2000s?
Mm-hmm.
That's a little more than it is now.
Yeah, I got another. I got a million and one questions. But Gatlinburg, my wife and her friends went there about a month ago, which we had known about your place there, but we have to make a special visit. But it's growing so much. Do you still see opportunities there?
Yeah, it's really interesting because when we look at, there's a lot of good beach rental communities, and beach rental areas, beaches generally don't have the regulations like these cities do, and so they're good for rentals. But generally you can get like a 7 capitalization rate or an 8 capitalization rate, and I can explain kind of what it's like $7. If you invest 100, you can expect $7 back.
Right.
Gotcha.
And so up there, when I first started buying, they were at 40. Mm-hmm. And now they're still in the teens. And so before long, and it happened a lot faster than I thought it was going to, but between last summer and right now, like it like doubled. We're at half the capitalization rate, and I think it'll probably do that again. Okay. I'm sorry.
No worries, man, no worries.
And so I still think there's opportunity. And anytime you're willing to fix something up, like we took a cabin that had a great view, and we redid some of the inside, we built a deck on it, and we had this pool, this a modular pool made out of a shipping container. We shipped it in from Vancouver, Canada, and it was heated. And so we put that pool outside on the deck, and there was nothing else like it up there.
Wow.
So anytime you can differentiate yourself, and it rented 25 days in January, 25 days in February, it's rented 30 days in July and June.
Incredible.
And just gangbusters. And people swim outside despite how cold it is, and it's a heated pool. And then you got a hot tub. And so what we found up there is traditionally everything is like this bear motif or this deer motif or a moose motif.
Yeah.
So we grabbed this interior designer out of Knoxville, and she just makes it different, more modern, puts good games in there and stuff like that. Boy. And it just, pictures are everything. You might have 25 pictures on the website, but 3 of them sell it. Yep. 3 to 4 pictures is what sell it.
That's awesome. Good
it's
stuff,
cool.
Man. Good stuff.
You can do it, man. You will. I already see it. He's going to do it.
I'm salivating. Okay, you got people out there that like saying, I love what you're saying, whether it's stock market and or real estate. Where's the starting point? Where's a practical starting point for somebody who has vision, but that may be all they have right now?
Yeah. I mean, that's what we all have to do. It's beautiful to think about the light at the end of the tunnel, and it's tough thinking about going through the paces. Yeah. But my best recommendation is to find the highest paying job that you can. Okay. Work as much as you can. I know how many, I'm not super proud of this because I miss some of my family's life, but I know how many hours are in a week because I worked almost all of them. Wow. For like 5 years. Okay. And, but the smart thing to do is just as frugal as you can be, because it's amazing the compounding effect that if you just discipline yourself for 2 to 3 years, right? Maybe not even that, maybe 18 months, just to get that start, just to get your first little nest egg and let that start compounding and building. But don't try to escape the hard work and try to take a shortcut. There's really no shortcut. You got to do it. You got to go through it.
Got to do the work.
And I guess Mark really sort of summarized, guys, out there what Council and I've been talking about, bridging the gap, about that thing about cash flow. Go out and get that highest paid job. Let's say if you're bringing in 10 grand a month, and it's easy to want to live like you're bringing in 10 grand a month, but really get those expenses down whereby maybe it's only $2,000 or $3,000 a month. And if you're banking 7 grand a month over a year's time or whatever, you're looking at 100 grand really fast. And that's a great way to get started. So remember, as we talked about here, that cash flow is the rocket fuel to building wealth. So please take to heart what Mark said. make a sacrifice.
Yeah.
I remember reading a book years ago by a guy named Dennis Kimbrough, and he talked about if you're willing to live 2 years of your life like other people want, you can live the rest like other people can. And you're right, I think we all can go back to like about a 2-year window that we just got locked in. We had a talk with our wife and our children, and we just got locked in, and and by the time we got finished, it was like, oh my God, I'm a place I never thought I'd be. And it becomes easier.
Absolutely.
And I'm a natural spender. I like stuff.
Yeah, yeah.
I like to spend money. And so I make myself buy assets now.
Well said, man.
If you want this, Mark, you have to do this. I mean, we went on the Dave Ramsey show years ago. It was 2017, and
Fantastic.
did that scream and everything. But he always says, live like no one else, so later you can live and give like no one else.
That's it, no doubt about it. And I love something that Mark just said. They did the scream. Why? Because they were debt free. So be mindful, no matter in the midst of getting all these assets and building generational wealth and all like that, still have the mentality that we want to be debt free, because it's possible. It all depends on how bad you really want it and willing to make the sacrifice.
Yeah.
That's good.
Want to be respectful of your time, so
It's all good, man.
Well, I'm not, counselor. I'm teasing. Hey, I'm gonna ask you. I'm gonna put you on the spot though. When time permits.
Sure.
Will you come back and see us again?
Man, you guys are great. I'd love to.
Yeah. All right. You heard it's recorded. You got it recorded, Troy. All right. Good. All right. Good. Thank you, Mark. Thank you so much, brother.
Yeah, you're definitely
thank
welcome.
You so much.
guys are
anything you
good.
want to close out with or add, or something we didn't cover?
No, I would just, the only thing I would add is my life has been infinitely greater when I don't think of myself as the beneficiary of any kind of funds.
Yeah.
It's not my money, first of all, it's God's money, and He has trusted me to manage it. And so when I go to invest some of God's money, like, you just don't be willy-nilly. Be thoughtful, and
His money, yes.
be prayerful about it. And so when it's my money, that's one thing. When it's God's money, it's a different thing. If you can change your mindset and change, like, okay, this is God's money. He allowed me to get this. I should give more back to His kingdom. So it's way more fun. That's the most fun thing that you can do with money is give it away.
I love it. Well said.
So that's
All
it.
right. That's it. Woo! I'm sorry. Yes, that was great.
Well, guys, we're going to wrap up this special episode, man. I want to thank Mark again for coming. Just thank him for being a good friend. And we probably had lunch more than we worked out together, but I appreciate that. But for, I guess, episode 23 of Bridging the Gap, I'm your host, Counselor Glenn.
Hey, William V. Thompson.
Mark McDaniel.
See you guys on the next one.
All right.
Hey guys, Counselor Glenn with Bridging the Gap, where we talk about bridging the generational gap as well as the wealth gap. We literally take you step by step and tell you how to bridge that gap from where you are to where you want to be, from the aspect of a boomer, somebody that's been there, done that in the Xer. Hope you guys enjoyed the content. Make sure you subscribe to our channel and make sure you hit the bell notification. We want to let you know as soon as we drop something, we want you guys to get it, want you to be first. So make sure you do those two things for us, and we can't wait to drop some more content.